How's it going, everybody? It's Stas here. So the stock market had a very strong day today. Nice bounce back day. S&P 500 up 46 points, up 1.4%. The Dow Jones ended up going up 290 points, up over 1%. And tech stocks ended up coming back. Nasdaq broke out today, up 280 points, up over 2.5%. Very strong day from the tech stocks. So in this video, we're going to be breaking down the stock market a bit more, going deeper into some technicals here, and I also want to break down the top stocks, many of which are tech stocks that I'm looking to trade right now as we're getting deeper into August. And like I said in yesterday's video, guys, I mean, many tech stocks out there, as crazy as it sounds, many of them are down about 20% from their peak. And now that the Nasdaq is breaking out here on some smaller time frames, again, many of these tech stocks are showing a sign of a breakout as well. So I want to go over those in this video, and if you guys stick till the end of the video, I'm going to be breaking down some bonus stocks as well. And in the middle of the video, we'll talk about some earnings, where my head is at right now, and in general, what I've been doing in the markets as of late. So a lot to break down today. If you guys find value in the video, I'm sure you will, hit that like button for me, consider subscribing to the channel, and join our Strive Smart Discord chat and Facebook group. Those are free of charge. Link down below in the description box, and you can also get 2 free stocks from Webull, valued up to $1,400 as well. Link down below. All you have to do is deposit $100 into the account, and you get those 2 free stocks. So let's get into it right now. Starting off, like always, guys, Monday through Friday, we break stuff down every single day. So again, make sure to subscribe. Starting off here with the S&P 500, up 46 bucks, up 1.4% today, and we hit a high. We did not hit an all-time high quite yet. All-time highs were hit back on February 19th in 2020. You guys can see it here. 33.93 was the all-time high, so we didn't hit an all-time high quite yet, but we did hit a high when it comes down to the weekly chart, which is the 5-day, 5-minute here. And I like looking at this when I'm breaking down kind of weekly analysis and more kind of what's going on from day to day. I like looking at the 5-day, 5-minute, as well as, let's say, the 20-day 1 hour. That's another time frame that I personally like looking at. But if we see here on the 20-day hour as well as the 5-day 5-minute, we hit a high pretty much at 3:30 p.m. Eastern Standard Time, and that signifies to me that the bulls have regained and their momentum and kind of regained control of this rally. Because if you guys remember, yesterday we were smooth sailing all day, and pretty much 2 hours before the market closed, S&P took a big dump, dropped from 33.80 down to about 33.30. We held that support at the close yesterday at about 33.30, which was an old all-time high. It was also a support from back in the kind of the beginning of August, really just a couple of days ago. So the fact that we gapped up today, that is a very good sign for the bulls. And the fact that we hit a high on this 5-day, 5-minute chart and on the 20-day 1 hour chart, that is a very good sign as well. So at this point, bulls are in full control, and we're really close to all-time highs. And it seems like what I said a couple days ago of the S&P hitting all-time highs within the week, at most 2 weeks, is coming into fruition, guys. It is playing out as, again, we're about 10 points, 15 points at this point away from those all-time highs. So for tomorrow, guys, just watch out for 33.93. That's the big level that I'm watching. And if we break that, I mean, 3,400 is going to be the next point that the S&P is heading to. And at that point, we're not going to have any resistances to go off of, only support levels. And, if we do break out all-time high 3,400 hits, I mean, a point that I'd look out for as a support for a pull down is simply going to be 33.90, generally where the all-time high is right now. That is where, if we do see a pull down, I mean, that is one point the S&P could hold if we do get into the $3,400 territory. And going over here to the Dow Jones, a big level of resistance right now is right around 28,200. And you guys can see yesterday we actually tested that. We gapped up right around 28,200, got rejected there, sold off, and saw a pretty aggressive sell-off at that. I mean, we lost about 400 points on the Dow Jones from the peak to the drop yesterday. And even though we dropped, I mean, yesterday, if you guys take a look, the uptrend was still intact. I mean, we closed at a higher low here, and the gap up this morning really solidified that the bulls were in charge on the Dow, and we rallied pretty much all day. So that is a very good sign. So for tomorrow, I'd watch and see, and quite honestly, for the rest of this week, I'm watching to see if 28,200 breaks, and in general, if this high from yesterday, the 11th of August, if 28,150 breaks. Because if that breaks, the bulls get charge again. They maintain, although they're still in control right now, but if we break 28.2, they'll have even more control, to the point that, believe it or not, guys, the Dow Jones might be gunning for all-time highs. The Dow has been lagging. We all know that. Nasdaq has hit all-time highs. S&P is right there at this point, but the Dow not having many tech stocks in it, not having too much tech exposure, it's not hitting all-time highs. It's been lagging. So now finally, as some of these Dow stocks are getting back to life, we're about to break 28,200. This could be a launching pad for the Dow Jones up to all-time highs, and especially now that we got a correction in the RSI, although it is a bit overbought still, we could see a rally there before we get another pull down. So we'll see what happens at 28,200 as a resistance. On the bottom side as a support, watch 27,500. And when it comes down to the Nasdaq, guys, very close to all-time highs here yet again. Nasdaq, ever since it broke out of 11,000, ever since it held 11,000, that was a sign that I was really looking at as a very bullish sign. And yesterday we kind of got below 11,000. We got down to 10,800, and we actually held a higher low there on the 180 SMA here on the hourly chart. So that was a good sign. And an even better sign was that we gapped up and we regained 11,000 as a support today and closed above it on an upswing. So that leads me to believe Nasdaq here is it's heading to all-time highs. As crazy as that sounds, it's probably going to all-time highs, guys. We can see it's about $130 under all-time highs. That's about a 1% move, so that could easily be made here in the next couple of days. By next week, I see no problem with that. So let me know down below what are your thoughts when it comes down to the stock market, Nasdaq, Dow, S&P. Where are we going in general? I would love to know. Now let's get into some earnings reports. Actually, before we do that, let's talk about what I personally did very quickly in the markets today. Then we'll break down earnings reports and a bunch of tech stocks and bonus stocks at the end of the video that I'm watching right now. So what I did is I picked up some GLD today. That's the fresh, brand new position of the day for me. And GLD is an ETF that I've been going over that tracks gold. It's not a gold miners ETF. It's not a junior miners ETF. It is simply a ETF that tracks the price of gold. It's meant to just mimic the price action of gold, right? So let's say you don't have physical gold in your exposure, in your hands, in a safe. You don't have gold. A way to get exposure is by simply buying this. And for me, we talked about it yesterday, right? Gold was a bit overbought. It got a bit overheated to 2,100 an ounce. We got this new stimulus passing. That could be a selling factor for gold here. People are locking profits, maybe buying into some stocks to ride out the wave here until maybe the end of 2020. We'll see what ends up happening. That could be a reason. And, we saw a big pull down in gold because of this. We saw a nice, healthy, about a 6%. Actually, crap, guys, it's almost like a 10% drop at this point from the 2,100 peak. And, for me, I think this is simply a pull down. I think the bull market in gold is still intact, right? And what I say all the time is every bull market, there are pull downs within it, guys. Just because gold's pulling down, a stock pulls down, whatever pulls down, doesn't mean that it's crashing. It simply means that it's a healthy pull down. And in this case, this classifies as a healthy pull down since it's still holding the 180 SMA here on the 4-hour chart, which has been a support stemming back for months at this point with gold. So I'm liking GLD here, and that's why I ended up putting my money into it. And I bought in, let me double check my notes, but I believe at 181.4. It was later on in the day here. I'll show you guys. It was actually on the dip, although this is a bigger dip. But if we look on the intraday, we saw a dip within the dip, right? We saw a pop this morning to about 183. I didn't buy here, but I actually bought on the downswing later on in the day. Again, at about 185 or 181.45. That's where I ended up getting in right around this time period. So for me, guys, like I always say, I'm a swing trader mostly. I day trade here and there, but swing trading is more my style. Long-term investing as well. Those are the two that I mostly focus on. And when I'm building a swing trade position, I'm not going all in, right? I'm not putting all my chips in GLD. I have a lot of cash, and I scale into positions, right? So for me, GLD, I'm in with a little bit, 10, 15%, 20% of the goal. And if it ends up going down lower, and it already did go down lower from where I bought, I might end up adding more. I'd be happy to add, shares at 178, 179, even in the 185s as it starts to go back up, guys. And one thing I might continue doing, actually not continue doing because I already closed all my options for GLD and GDX, but I might buy more calls when it comes to, or some calls when it comes to GLD and GDX, right? Those are two that I like at this point, GLD being this one and GDX being a gold miners ETF, which is kind of a leveraged way to expose yourself to the price of gold. So those are some thoughts here, guys. I'm in GLD. I might buy calls on GLD and maybe GDX in the coming days here on this gold weakness. And I'm still in Upwork, UPWK. I'm in this one in the mid-14s. I think there's a lot of potential, quite honestly, back up to the 18s, 17s, 18s. So I'm looking to buy a lot into Upwork here. I'm loving it. Netflix is another one, NFLX, that did very well today, up about 2%. I'm in the hole on this position. I'm down about $20 per share, believe it or not. I'm in the mid-490s, and this is a longer-term hold for me. It's kind of a longer-term swing trade. I feel very comfortable with simply just holding on to Netflix at this point and maybe even adding some more money. I'm at the point where recently I've done pretty well with my trades that, again, I have a lot of cash that I have ammunition to pump into the market, and, I'm not dying to take a profit because I need to take a profit. Again, I've done well recently, so I'm looking to just let some of these positions ride. Netflix being one of them, Upwork being another one of them. Fastly is another one that I'm down on. I'm down a decent amount on this one. I'm in at about $91. So I'm letting these positions ride out a bit. Again, I have a lot of cash where I'm looking to add into some positions. I bought GLD here. We'll get into some tech stocks in a little bit. And I'm also in Workhorse still. I'm in Workhorse at about 1640, and I'm also down on this position. So there's a couple positions here that I'm in the red on, but again, I'm not sweating it because before these positions, guys, I've been doing pretty well. I've been locking in a lot of profits. I've made money, so I'm not looking to just sell out of these because I'm down, right? Again, I have cash. I can average in. I can wait. There's time on my side. There's no rush. I'm just trying to show you guys how I'm being pretty patient here despite the fact that I'm down on some of these positions. And I'd love to know what you guys have to think down below in the comments. As always, now let's get into some earnings reports. So Revolve RVLV, I'll be the first to tell you, I haven't done a deep dive into this company myself, but the reason why we're going to talk about it is because they're up a lot after hours. I mean, gosh, the stock's up up over $3 after hours. It's up from $19.50 up to about $23. It actually almost hit $25 per share. So this is because of EPS coming in at 20 cents and revenue coming in at $142.8 million, and net income actually came in at about $14.2 million. And I'm not exactly sure if they beat versus expectations. You guys can see, okay, they posted stronger than expected sales, and they swung a quarter to profit, so that could have been a surprise profit there. And, when a company gets a surprise profit, a beat on earnings, guidance goes up, these are some things that could end up pushing up a stock. So we're seeing Revolve up a massive amount, up over 20% after hours here, about 20%. And what I do know about them is they are some type of online retail play. I believe it's for women's fashion. It could be men's fashion as well, but I know for sure it's women's fashion. So it makes sense that they're doing pretty decent because we're in a crisis time period right now, guys. We all know this. Online shopping's through the roof. So that is why Revolve could be doing well. One could speculate that is why, and we all believe that is why at the end of the day. And TCEHY, Tencent, they were supposed to report earnings on Monday, but they ended up pushing them back to today, and they ended up doing pretty well. 44 cents EPS versus 41 cents estimated. Revenue came in at $16.2 billion versus $16.1 billion estimated, and the revenue year over year is pretty great. Pretty fantastic, up 29% revenue growth year over year, which that's pretty solid. And the stock is at a pretty decent, not really, I don't know if it's at a decent value, because valuing a stock versus doing technical analysis, it's completely different. But if we're just looking at a technical analysis here, I mean, we're down $5 off the highs. We've pulled down. We've held the main moving average here at a higher low, which has been a support as of late. And again, we're about $5 off the highs, giving us around a 7% potential here with 10 cents. So I'm looking at this as a potential swing trade. We'll see what ends up happening. If we start to break into $70, that could be a bigger confirmation that this thing's going back up to the mid-70s. So we'll see what ends up happening there with 10 cent. And Lyft, guys, Lyft. Lyft and Uber are under a lot of pressure right now. Lyft ended up losing $1.41 in EPS. Revenue came in at $339.3 million, and that was a loss of $473 million. Or actually, no, they lost $437 million in the quarter, which is just insane, guys. They're burning cash like crazy. And we got news that Uber and Lyft, they actually might shut down their California operation. I don't know how long, but, at least in the short term here, they might shut it down due to them having to classify their drivers as employees. So I know right now they're not employees, right? They're independent contractors. There's a difference there, right? So, if that could end up shutting down California operation, that's going to be huge. I mean, you guys have to realize California is the biggest state in the United States, and I believe that's the biggest market. It's got to be for Uber and Lyft at this point. So, I'd be very careful with this one. Quite honestly, I'm staying away unless I play a put option or something. I'm staying away from this, but I'm just watching it overall to see how things pan out. And these are just some companies that have been crushed, guys. I mean, I feel like not enough people are talking about how badly Uber and Lyft have been crushed. I mean, people talk about restaurants, casinos, hotels, airlines, but Lyft and Uber, guys, geez, they've been crushed as well. Lyft even more because Uber at least has Uber Eats, and they make a lot of money from Uber Eats. That's a growing business. They just bought... What did they just buy? They just bought. They just merged with. Did they just merge with Grubhub? Was that what they did? I forget exactly, but they just merged with somebody when it comes to that. And Lyft only does driving. I mean, so that is hurting their business even more. The shutdown's hurting their business even more. So I'd be very careful with Uber and Lyft at this point in time, quite honestly, guys. And now let's get into some tech stocks that are beaten down. Not beaten down, let's not exaggerate, but they are down a bit from their peaks here that I believe could be breaking out. I mean, one of them already is Tesla, TSLA, 5-to-1 stock split announcement. The stock is up 13% on this news, up almost $200. I think it was up $200 at one point. And what have we been saying, guys? I mean, I've been saying this on the channel, not about the split, but I've been saying that Tesla needs one piece of news to either shoot it up or shoot it down, because the stock has just been boring, quite honestly. Over the past, it's almost been 3 weeks. I mean, the stock's just been stagnant, very boring. It's just been in need of a big piece of news to shoot it up, and we got that news, guys. 5-to-1 split. And questions I get a lot about splits. I'm sure many of you guys know at this point, you understand how it works, but for the beginners out there, you don't get more shares for free. The value of the business does not change. You simply, let's say for example, you have one Tesla share, you simply get 5 Tesla shares that are worth the same value of that one Tesla share you have now. So for example, Tesla share price, let's say it's $1,500, you're going to get, if you have one share at $1,500, you're going to get 5 shares at $300. So it's literally like you divide Tesla stock by 5. That's what it is, right? You divide Tesla stock by 5 and you multiply your shares by 5. And that is what happens for this split. And at this point, guys, we're at a big resistance, right? Despite us seeing a rally, we're still at a resistance where we failed breaking out back in the end of July. And quite honestly, we closed right under it, right around 1560. So for tomorrow, guys, I'm watching Tesla above 1560. I think if it makes a move out of 1560, 1600 could be where it's going. And I wouldn't be surprised if we see a gap up, let's say, to 1600. Who knows? And 1600 is where we were back in the middle of July. We double topped at about 1600 before dropping heading into earnings. So that could be where Tesla ends up going to next. I'm very interested in seeing what ends up happening with this particular stock here. Adobe, ADBE, is another one that is down, not a lot, but it's down a decent amount from where it was back in the beginning of August and back towards the beginning of July. It's down about $30 from that high at 472. Now it's trading at 445. Today's pop up $10, up 2%, confirms a higher low here on the 180 SMA, as you guys can see. And on the 5-day, 5-minute, we're getting a breakout of both of the moving averages. So Adobe is looking strong. I think we do have a move in store of at least $15 to $20 per share, whether that's back up to 460 to 465. That's kind of what I think is about to happen with Adobe. And let me show you guys on the 30-day chart, let's just draw out a resistance to show you more on a visual basis. I mean, this is where we've typically seen selling around 460 to about 470. So there is some room there. There is some profit to be made here on Adobe. And Shopify is another one, SHOP. Let's pull it up. This one's down, not a lot. I mean, it's down about $120 per share from its peak. That is a loss of about 10%, so it's not a whole lot, but it's down a decent amount, right? It's down an amount that makes swing traders attracted to the stock, right? And the fact that it's right now on this 180 SMA on the 4-hour chart seems like the past 2 days we've been seeing consolidation there. That is giving me some hope, right? Some hope that we're going to head higher. And we're slowly seeing a break out of these moving averages on the 5-day, 5-minute, but we haven't gotten the full-on confirmation of the breakout, which is kind of what I'm waiting for at this point before I enter. And if we get up into the thousands, 1,020, 1,010. That is where I think we might start making some headway here on the stock. Really anything above $1,000. So I'm watching that, and from there we could make a move back up to 1,050, 1,100 bucks. That's kind of where I'm looking to make this Shopify move. And AMD, Advanced Micro Devices, is another one here. Very strong day, up 7.5%. And it's still up, actually, no, it's down. Despite up being 8% today, it's still down about $5 from its all-time high. So there could still be some headway in AMD. And with today's big move, bulls came in early on in the day. They ended up getting out of the 50 SMA here on the 4-hour chart. You guys can see on the 5-day, 5-minute, the downtrend is breaking. So this is a very good sign on any weakness here. This is a very good sign, and on any weakness tomorrow, if we get any weakness, this could end up being a nice little dip by, whether it's 82, 81, 81.50. We could get some shares there in the low 80s, and if we even go higher, let's say 83, that could be the break up to the upside that we might be going even higher without a pull down. So I'm watching AMD here, very interested in this to get on some momentum there, and I'm being careful with these stocks as well, guys. Not looking to jump too quickly into any of these, but we'll give them time, and if we get the confirmations right, if we're very certain, that is when we're going to put money into them. And Microsoft is coming back. We hit a low of about $203, I think, earlier this week. Was it yesterday, the day before? Yep, $203 here. And now we're getting a breakout. 5-day, 5-minute chart is showing a breakout of both moving averages. And you'll see with all these tech stocks, it's really the same story, right? On the 5-day, 5-minute, all of them are showing that upwards breakout. And now we closed under about 209, 210, which is a resistance stemming back from the 11th of August yesterday pre-market. So honestly, guys, I think if Microsoft's able to break 210, 211, I think we should be able to get back to the all-time highs no problem, which at that point, I'd probably sell out, lock in some profits, and if we break 217, that is where we might get a pop. 220s, 225 on Microsoft. That's kind of where I think it's going if we're looking out a month to 2 months out. So Microsoft, I like it here on the dip. Square is another one, SQ, trading in the high 130s, down about $20 off of its high. That's about a 12% drop. And we're holding a pretty critical spot. We're holding an old all-time high here at about 138, 139. We're also holding the 50 SMA, but we're not getting that full-on breakout on the 5-day, 5-minute like some of these other tech stocks. So for me, I'd feel more comfortable getting into Square if it's able to get into the 142 to 143 range, riding it up to 150. That's where I think it could end up going by next week, the week after. And there's potential, right? There's a lot of potential here for a rally, despite the fact that many of these tech stocks could be overvalued at this point, right? They can still rally despite it being overvalued, guys. The technicals do not lie. And as always, do your own due diligence, do your own research when it comes down to buying and selling stocks. Don't buy or sell based on my opinion. Always formulate your own opinion first, then do the buying and the selling. And NEO is the final, I guess you can say, tech stock. Yeah, I consider it a tech play, quite honestly, as well as obviously a vehicle play here, an EV play. It's really just an innovative play. I like it here at about 1350. We hit a high at 1640 back in the middle of July, sold off as a lot of the electric vehicles plays, all these EV stocks started to sell off, right? It cooled off, came back to earth, dropped to about $11. Now we saw a pop to about $16 as they reported earnings, and then the stock dropped all the way to about $12.80 today. I think yesterday it got down to about 1260. No, today it got down to about 1260. So NIO at this point, they reported solid earnings, and if you guys want to see a more in-depth video on NIO, I made one earlier today. Go check it out. I'll link it down below in the description box. I very, very highly recommend you guys go check that out on a deep dive on the earnings. But they did pretty well, and the stock dropped about $2.50. So for me, as a long-term investor, I'm not buying in quite yet because I own shares in the $3.50 range. But as a swing trader, I'm looking at this like, hey, I could make some income on this trade. You know, there's potential here of about 15% from where we're consolidating right now up to the high from just yesterday. And we've seen NIO make that move in a day. Not saying it will make it in a day, but I'm just saying it's a piece of profit that could be had. And at this point, you know, if we grab 5% of that 15% potential, 3% of it, whatever, I consider that a win. So I'm looking for that. And anything above $13.50 to $14, I think that is breakout territory for the stock. And some non-tech stocks here, Ulta is one that I like. RSI cooled off a bit. We saw a pull down from 226 down to 217 now, still trading under 220, which is a big level of resistance. But now that we're getting into their earnings period, we're getting more stimulus. Maybe we can see Ulta, you know, get out of 220, right? 220, I think it could break out to the 230s, mid 230s from there. Starbucks is another one here that I'm liking, non-tech related. It's seeing a big resistance at $80. I keep saying to you guys, if 80 breaks, which it's been a resistance since April, there's going to be a lot of upside here on Starbucks. I'm sticking by that, and I have my money in it, so I have my money where my mouth is here in many accounts, and I believe it's going to happen. 80, 85, 90 eventually. I think it's going to get there. And Cake, also known as Cheesecake Factory, is at a pretty big spot, $27. I think this one in the short term has potential to about $30. And yeah, you know, I haven't bought some shares in my swing account yet. But quite honestly, I've been buying this in one of my retirement accounts ever since $22. So, you know, I'm long this company, you know, either way. And again, as a swing trade, $27 to $30, that's where I'm looking to make things happen. And 3 bonus picks here, Crm Salesforce. They're reporting earnings here in about 2 weeks. They're down about $17 off their highs, down about 8%. Also holding this 180 SMA here on the 4-hour chart. Could be a dip buy. And on the 5-day, 5-minute, we have not quite yet broken out of this downtrend. So I'd need to see a break out into the mid-190s, 200s roughly before taking a CRM position. And CGC, we haven't talked about this one. It's an MJ company. They just reported earnings, 30 cents of EPS, a loss of 30 cents that is, versus the 54-cent loss, which was actually reported same quarter last year. So that's a decent growth there year over year. And revenue was $110 million in Canadian dollars, and that's actually up 22% year over year. And the stock's actually down a little bit from that report. I believe the sales were a bit underwhelming for investors and traders, but either way, you know, you can see the uptrends holding. If I think $17.80 to $18 breaks, I think CGC could be a play back up to the mid-18s, maybe $19. And another one, last one, worth watching, reporting earnings, I believe, on Friday, is DKNG, also known as DraftKings. This was up 5.5% today. And although it's downtrending, no doubt about it, I mean, we're under main moving averages here. I like it anywhere out of $35. I think it has potential to break out $35.50 to $36, as that would be getting us out of those moving averages, right? And closer to that main resistance at about $39 to $40. So from $35 to $40, that could be a move. And even above that, if they report well or good earnings, from $40 up to $45, that could also be a move. So overall, guys, that is it for today's video. If you guys found value, as always, hit that like button for me. Let me know down below in the comments, what are your thoughts on the stock market, individual stocks, ETFs, what you're doing, where we're going moving forward. Let me know all your thoughts down below. And as you're leaving, don't forget to claim your 2 free stocks from Webull. Those are valued up to $1,400 by simply depositing $100 using my link. That's how you get your 2 free stocks. And you can join our Discord chat and Facebook group, link down below, also free of charge. And if you guys want to see that NEO earnings video, it's up here. Click this little card, excuse me, or you can go down below in the description and watch it by clicking that link. So I'll catch you all in the next video. Thanks for watching. As always, I appreciate your support. Stay safe out there. I'll catch you guys. Peace out.